Hello everyone and welcome to my channel. My name is Karen and in today's video, I'm going to give you an in-depth look at my $500,000 investment portfolio that I've built up by the age of 30. I know that building a sizable investment portfolio at a young age is an impressive feat, and I'm excited to share with you how I was able to achieve this. Over the course of this video, I'll break down the different asset classes, investment strategies, and overall portfolio allocation that have allowed me to reach this net worth milestone. Whether you're just starting out on your investment journey or looking to optimize an existing portfolio, I hope this video provides you with some valuable insights and inspiration. Let's dive in. Early career and saving habits. I'll start by providing some background on my financial journey up to this point. I graduated college about 8 years ago with a degree in your degree, and was able to secure a well-paying job in the your industry right out of school. From the very beginning of my career, I made saving and investing a top priority. I'll admit, in those early years, it wasn't always easy. The combination of student loan payments, rent, and other living expenses meant that I didn't have a ton of leftover income to invest. But I was disciplined about automating transfers from my checking account to my investment accounts on a monthly basis. Even if it was just a few $100s at first, I knew that consistency and time in the market would be key to building wealth. As my career progressed and my income steadily increased over the years, I was able to ramp up my savings and investment contributions significantly. I lived below my means, avoided lifestyle inflation, and funneled as much as I could into growing my portfolio. This allowed me to maximize the power of compounding returns and get a head start on building long-term wealth. Asset allocation. Now let's dive into the specifics of my $500,000 investment portfolio. At a high level, my asset allocation is structured as follows: 60% stocks, 30% bonds, 10% alternative investments. Starting with the stock allocation, the majority of my equity exposure is in broad market index funds that track the S&P 500 and total US stock market. I firmly believe in the power of passive, low-cost index investing as the foundation of a sound portfolio. Index funds provide instant diversification and have historically outperformed the majority of actively managed mutual funds over the long run. Within my stock allocation, I also have smaller positions in international developed market stocks as well as emerging market stocks. This global diversification helps to smooth out volatility and provides exposure to growth opportunities outside of just the US. For the bond portion of my portfolio, I'm primarily invested in high-quality, investment-grade corporate bonds and US Treasuries. I ladder the maturities of these fixed income holdings to create a steady stream of interest and principal payments. Bonds serve as the stability and income-generating component of my portfolio, helping to offset some of the volatility from the stock holdings. Lastly, the 10% alternative investment slice of my portfolio is diversified across real estate, private equity, and hedge funds. These alternative assets provide additional diversification and the potential for higher returns compared to traditional stocks and bonds. However, they also come with increased risk and less liquidity, so I've allocated a relatively small portion of my overall portfolio to this asset class. Investment strategies. In addition to the broad asset allocation, there are a few key investment strategies that I employ to manage my portfolio. Dollar cost averaging. One of the cornerstones of my approach is the practice of dollar cost averaging. Rather than trying to time the market and invest lump sums, I automate consistent monthly contributions across my various investment accounts. This helps to smooth out market volatility and ensures that I'm buying into the market at both high and low points. Over time, dollar cost averaging has proven to be an effective way to build wealth. Tax optimization. I also place a heavy emphasis on tax optimization within my portfolio. I max out contributions to tax-advantaged accounts like my 401k and Roth IRA each year in order to shield as much of my investment growth from taxes as possible. Additionally, I strategically harvest losses and gains in my taxable brokerage account to offset any capital gains liabilities. Risk management. Prudent risk management is another crucial element of my investment strategy. I diversify my holdings across asset classes, sectors, and individual securities in order to mitigate company-specific and market-wide risks. I also rebalance my portfolio on a regular basis to maintain my target asset allocation. This helps me stay disciplined and avoid getting caught up in the emotional swings of the market. By combining these various investment strategies, I've been able to build a portfolio that generates consistent returns while carefully managing risk. This balanced approach has been key to reaching the $500,000 milestone at a relatively young age. Income generation and withdrawal strategy. As I mentioned earlier, one of the reasons I've been able to accumulate this sizable portfolio is that I've been diligent about reinvesting the majority of my investment returns over the years. However, as I look towards the future, I'm starting to shift my focus towards generating income and withdrawals from my portfolio. My current withdrawal rate is around 3–4% per year, which I believe is a sustainable and conservative level that will allow my portfolio to continue growing over the long term. I generate this income through a combination of bond yields, dividend payments from my stock holdings, and occasional liquidations of appreciated assets. I've structured my portfolio's income streams to provide a steady, reliable cash flow that I can use to supplement my regular employment income. This hybrid approach of earned income plus portfolio income gives me a high degree of financial flexibility and security. Looking ahead, as I get closer to retirement age, I plan to gradually increase my withdrawal rate to around 4–5% per year. This will provide me with the funds I need to maintain my desired lifestyle without overly depleting my principal. Of course, I'll continue to monitor market conditions and adjust my withdrawal strategy accordingly. Ultimately, my goal is to create a portfolio that can sustain me through retirement and leave a lasting legacy for my family. By striking the right balance between growth, income, and risk management, I'm confident that I can achieve this objective. In conclusion, building a $500,000 investment portfolio by age 30 is no easy feat, but it's certainly achievable with the right mindset, discipline, and investment approach. Through consistent saving, strategic asset allocation, prudent risk management, and tax optimization, I've been able to steadily grow my net worth over the course of my career so far. And I'm excited to continue building upon this foundation in the years to come. I hope this video has provided you with some useful insights and inspiration for your own investment journey. If you have any other questions, feel free to leave them in the comments below. Thanks for watching, and I'll see you in the next one.